Based on the provided data for Bitcoin, the strategy suggests a cautious approach leaning towards a short-term investment perspective. The recent price history shows volatility with a downward trend, while the forecast indicates a slight decrease in the coming week. This suggests potential for short-term profit from a slight price dip. Therefore, the strategy recommends entering a short position around $62,300, the anticipated price point based on the forecast. A stop loss should be placed at $62,800, slightly above the current resistance level, to limit potential losses if the price unexpectedly rises. The target price is set at $60,700, aligning with the support price and aiming to capitalize on the predicted downward movement. This short-term strategy allows for potential profit from the anticipated price dip while managing risk through a well-defined stop loss. The provided data for Ethereum suggests a bearish outlook in the short term. The 2-week price change shows a downward trend, and the forecast indicates further declines, with prices potentially dropping from the current level to around $2,400, the support price at $2,351.12 and the resistance price at $2,557.86 further reinforce this bearish sentiment. Given this outlook, a short position seems to be the most suitable strategy to capitalize on the anticipated price decline. For an aggressive short-term investment strategy, an entry price of $2,440 would be ideal, aligning with the current price and the forecasted price. The stop loss should be set at $2,480 to protect against any unexpected price recovery. The target price should be set at $2,360, slightly above the support price, allowing you to take profits before the market hits major support. This strategy aims to profit from the expected short-term price decline in Ethereum. Based on the provided information about Solana, a short-term investment strategy appears to be most suitable. The 2-week price change demonstrates a downward trend, and the forecast suggests further declines in the coming week. This bearish outlook, coupled with the price being near the resistance level, indicates a potential for profit from a short position. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current price, which is slightly above the support level. The stop loss should be placed at $146.53, the resistance price, to minimize potential losses if the price unexpectedly rises. The target price would be $137.02, the support level, aiming to capitalize on the anticipated price decline. This strategy allows for a potential profit while mitigating risk by setting a clear stop loss. Given the price trends and forecast for Ripple, a cautious investment strategy would focus on a short-term approach. The historical prices show a recent downward trend, with the forecast indicating further declines. While the support price sits at $0.5227, the forecast suggests Ripple could drop from its current price to as low as $0.511. This indicates a bearish outlook in the short term, making a short position the most suitable strategy to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $0.534 could be considered, aligning with the current price and allowing for a potential price drop before hitting the support level. The stop loss should be set at $0.540 to protect against any unexpected price recovery. The target price should be set at $0.515, slightly above the forecasted lowest price, allowing you to take profits before the market potentially bounces back from the support level. Given the price trends and forecast for Cardano, a conservative investment strategy would focus on a medium-term approach to capitalize on the potential for a gradual upward movement. The historical prices show a slight downward trend over the past 2 weeks, but the forecast suggests a slight recovery in the coming week. The support price at $0.3302 indicates a potential floor for the price, while the resistance at $0.3578 suggests that further upward movement might be limited in the short term. Therefore, a long position is advisable, aiming to profit from the potential price increase towards a resistance level. An entry price of $0.344, slightly below the current price, would allow you to enter the market at a relatively attractive price point. The stop loss should be set at $0.335, below the support price, to protect against significant downside movements. The target price should be set at $0.355, slightly below the resistance level, allowing you to take profits before the market potentially reaches resistance and experiences a pullback. Based on the provided SUB price history and forecast, an aggressive investment strategy would favor a short-term, long position. The historical data shows a consistent upward trend, with the current price hovering near the support level of $1.8424. Forecast indicates continued upward movement, with prices projected to reach $2.27 within the next week. This suggests a bullish outlook in the short term, making a long position a potentially profitable choice. To execute this strategy, an entry price of $1.85 would be suitable, allowing you to buy in at a slightly higher price than the current support level. A stop loss at $1.81 would protect your investment from any unexpected price drops. The target price should be set at $2.10, aiming to capture a significant portion of the forecasted price increase while leaving room for potential pullbacks. This strategy capitalizes on the anticipated upward momentum of SUB, aiming for a quick but potentially rewarding return. Given the Filecoin price trends and forecast, a cautious investment strategy would focus on a short to medium-term approach. The historical prices show a recent downward trend, with the current price hovering near the support level of $3.577. While the forecast suggests a slight recovery in the coming week, it remains relatively flat, indicating limited upward momentum. Therefore, a long position is not recommended at this time due to the potential for further price declines. Instead, a short position could be considered, entering at a price slightly above the current market price, around $3.65. The stop loss should be set at $3.715, the resistance level, to protect against unexpected price surges. The target price could be set at $3.577, the support level, aiming to capitalize on the anticipated downward movement. This strategy allows for a moderate risk-reward ratio while taking advantage of the current market conditions. Based on the provided price history and forecast for ThetaNetwork, a short-term investment strategy appears most suitable. The historical data reveals a downward trend over the past 2 weeks, with the forecast suggesting continued decline. The price is currently near its support level, indicating potential for a further drop towards the predicted lows. This bearish outlook supports a short position. An aggressive short-term strategy would involve entering a short position at the current price of $1.3. The stop loss should be set slightly above the current price at $1.34 to minimize potential losses if the price unexpectedly rebounds. The target price could be set at $1.245, aligning with the support level and allowing for a decent profit margin. This strategy capitalizes on the anticipated price decline while managing risk through a tight stop loss. Remember, this is a short-term strategy, and the position should be closed promptly upon reaching the target price, or if market conditions change. Based on the provided historical price data and the forecast for Dogwifhat, a bullish investment strategy appears promising. Price has shown an upward trend over the past 2 weeks, reaching a recent high of $2.57. The forecast predicts further price increases, suggesting a continued upward momentum. This positive outlook, coupled with the current price being relatively close to the support level of $2.44, indicates a potential for further gains. Therefore, I recommend a long position on Dogwifhat. An ideal entry price would be around $2.46, slightly below the recent high, allowing for a margin of safety. The stop loss should be set at $2.44, just below the support level, to protect against any unexpected downward movement. The target price could be set at $2.63, aligning with the forecast and representing a reasonable profit target. This strategy capitalizes on the bullish sentiment surrounding Dogwifhat, while managing risk effectively. Given the historical price data and the one-week forecast for Stellar, a cautious investment strategy with a short-term perspective appears most suitable. The recent price action shows a downward trend, and the forecast suggests further declines in the coming week, while the support price at $0.0881 offers a potential floor. The resistance at $0.0923 indicates limited upside potential. Therefore, a short position on Stellar is recommended. An entry price of $0.091 could be considered, aligning with the current price and the downward trend. A stop loss should be placed at $0.0923, above the resistance level, to limit potential losses. The target price could be set at $0.0881, the support price, allowing for a modest profit if the forecast holds true. This strategy aims to capitalize on the anticipated price decline, while managing risk effectively. Based on the provided historical price data and forecast for Starknet, a cautious short-term investment strategy appears most suitable. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. While the support price sits at $0.379, the resistance is at $0.3973, suggesting a limited upside potential in the near term. Therefore, a short position is recommended to capitalize on the anticipated price decrease. An ideal entry price would be $0.395, aligning with the forecast and offering a potential profit margin. The stop loss should be set at $0.401 to protect against unexpected price surges. The target price could be set at $0.375, aiming to capture a significant portion of the anticipated decline, while leaving room for potential price fluctuations. This strategy prioritizes risk management and capitalizes on the current bearish market sentiment surrounding Starknet. Given the price trends and forecast for Pendle, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price close to its forecast and near the support level of $3.669. The resistance is at $4.649, indicating that a significant upward movement is unlikely in the short term. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For a cautious short-term investment strategy, an entry price of $3.89 would be ideal, aligning with the current price and the recent downward trend. The stop loss should be set at $3.99 to protect against any unexpected price recovery. The target price should be set at $3.68, slightly above the support level, allowing you to take profits before the market hits major support at $3.69. This strategy aims to capitalize on the short-term bearish sentiment while managing risk effectively. Based on the provided price information for Render, a cautious investment strategy is recommended. The 2-week price history reveals a downward trend, and the forecast indicates further declines. Although the support price at $5.264 might offer some cushioning, the resistance at $5.608 suggests limited upward potential. Given this bearish outlook, a short position appears to be the most suitable approach. To implement this strategy, an entry price of $5.43 could be considered, aligning with the forecast price and offering a slight buffer above the current price. The stop loss should be set at $5.55, slightly above the entry price to minimize potential losses from unexpected price surges. The target price could be set at $5.27, aiming to capture a portion of the anticipated decline, while staying above the support level. This strategy prioritizes risk management while aiming to capitalize on the potential for a short-term price drop in Render. Based on the provided VeChain price history and forecast, a cautious short-term investment strategy appears most suitable. The historical price data reveals a downward trend over the past 2 weeks, with the forecast indicating further declines. The support price at $0.02095 suggests a potential floor for the price, while the resistance at $0.02274 indicates a ceiling for potential upward movements. Given this context, a short position would be advisable to capitalize on the anticipated price decline. An entry price of $0.0226 aligns with the current price and the forecasted decline. The stop loss should be set at $0.0233 to mitigate risk in case of an unexpected price surge. The target price should be set at $0.021, allowing for a potential profit while avoiding chasing the price too close to the support level. This strategy emphasizes a cautious approach, aiming to capitalize on the expected price decline while minimizing potential losses. Based on the provided price information for Binancecoin, a short-term investment strategy appears most suitable. The historical price data reveals a recent downward trend, with the price fluctuating between $541 and $596. The forecast price suggests a continued downward movement, with a projected low of $562. This bearish outlook, coupled with the proximity of the current price to the resistance level, indicates a potential opportunity for short selling. Therefore, an aggressive short-term strategy would involve entering a short position at the current price, around $580. The stop loss should be set slightly above the current price at $587, mitigating potential losses from an unexpected price surge. Target price could be set at $547, aligning with the historical low and the forecasted price movement. This strategy aims to capitalize on the anticipated price decline within the short term, taking advantage of the bearish momentum indicated by the historical data and the price forecast. Based on the provided Conflux price history and forecast, a medium-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with recent consolidation around the $0.170, $0.180 range. The forecast predicts a gradual upward movement, reaching $0.199 within the next week. This suggests a potential for continued price growth in the coming weeks. Given this outlook, a long position is recommended. An optimal entry price would be around $0.175, slightly below the current price, allowing for a margin of safety. The stop loss should be set at $0.1644, the support price, to limit potential losses. The target price could be set at $0.1943, the resistance price, aiming to capitalize on the anticipated price appreciation. This strategy allows for a balanced approach, capturing potential gains while mitigating risk through a well-defined stop loss. Based on the provided price information for Worldcoin, a cautious short-term investment strategy appears most suitable. The 2-week price change demonstrates a downward trend, with the forecast projecting further declines, while the support price at $1.609 offers a potential floor. The resistance at $1.938 suggests limited upward movement in the near term. Therefore, a short position is recommended, aiming to capitalize on the anticipated price decline. An entry price around $1.86, slightly above the recent price action, would allow for some buffer against immediate price fluctuations. The stop loss should be placed at $1.94, the recent high point, to minimize potential losses if the price unexpectedly surges. The target price could be set at $1.65, aiming to capture a portion of the projected downward movement while staying above the support level. This strategy prioritizes risk management and capitalizes on the current bearish sentiment surrounding Worldcoin. Avalanche's recent price history shows a downward trend, with a slight bounce at the end. The forecast indicates a continuation of this downward trend, suggesting a bearish outlook for the short term. Considering the support price of $24.65 and the resistance price of $26.95, a short position appears to be the most suitable strategy for the next 2 weeks. To implement this strategy, an entry price of $26.00 would be ideal, allowing you to capitalize on the potential price decline towards the support level. A stop loss at $26.50 would protect against any unexpected upward price movements, while a target price of $24.80 would allow you to secure profits before the price reaches the support level. This strategy aligns with the bearish forecast and aims to capitalize on the anticipated downward price movement of Avalanche. Given the price trends and forecast for Jupiter, a conservative investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the forecast indicating further declines. The forecast suggests Jupiter could drop from its current price to as low as $0.749, while the support price sits at $0.7434 and resistance at $0.7897. This indicates a bearish outlook in the short term, making a short position the most suitable strategy to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $0.768 would be ideal, aligning with the current price and the forecasted price. The stop loss should be set at $0.7897 to protect against any unexpected price recovery. The target price should be set at $0.7434, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $0.7434. This strategy aims to capitalize on the potential for a short-term price decline while minimizing risk. Based on the provided EOS data, a short-term bearish strategy appears most suitable. The 2-week price history demonstrates a downward trend, and the forecast predicts further declines. The current price is hovering near the support level of $0.4669, indicating potential for further downward movement. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current market price, with a stop loss set at $0.478, slightly above the recent high, to limit potential losses. The target price would be $0.454, aligning with the lowest predicted price in the forecast. This approach capitalizes on the anticipated price decline, while managing risk through a well-defined stop loss. Based on the provided TRON price data and forecast, a medium-term investment strategy appears most suitable. The historical price data shows a recent upward trend, with prices hovering around $0.156. Forecast predicts continued upward movement, reaching up to $0.168 in the coming week. This suggests a positive outlook for TRON in the near future. Therefore, a long position is recommended. An ideal entry price would be $0.157, slightly above the current price and close to the recent support level. To manage risk, a stop-loss order should be placed at $0.156, below the entry price and near the support level. The target price can be set at $0.163, aligning with the forecast and offering a healthy profit margin. This strategy allows for capitalizing on the anticipated price increase, while mitigating potential losses. Given the price trends and forecast for STRK, cautious investment strategy would focus on a short-term approach to capitalize on the potential for a slight upward movement. The historical prices show a fluctuating trend with a recent dip, but the forecast suggests a gradual increase in the coming week. The support price at $0.4211 provides a safety net, while the resistance at $0.4401 indicates a potential ceiling for the immediate upward movement. Therefore, a long position is advisable with an entry price around $0.425, aiming to capitalize on the predicted price increase. The stop loss should be set at $0.418 to minimize potential losses if the price drops below the support level. The target price could be set at $0.44, aiming to secure profits before encountering the resistance. This strategy allows for a balanced approach, acknowledging the potential for both upward and downward movements in the short term while prioritizing risk management. Based on the provided ShibaInu price information, a short-term investment strategy appears most suitable. The historical price data shows a slight downward trend over the past 2 weeks, with the current price hovering near the support level of $0.0000161. The forecast predicts a modest upward movement over the next week, but the price is still expected to remain below the resistance level of $0.000181. Considering this outlook, A long position is not recommended as the potential for significant gains is limited. Instead, a short-term short position could be considered. An aggressive entry price could be around $0.0000175, aligning with the forecast highest point. A stop loss should be set at $0.0000181, slightly above the entry price to minimize risk. The target price could be set at $0.0000161, aiming to capitalize on the potential price decline towards the support level. This strategy aims to profit from the limited upward momentum and potential for a pullback towards the support level. Given the price trends and forecast for Dogecoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a recent downward trend, with the current price hovering near the support level of $0.10537. The forecast suggests Dogecoin could continue to decline, reaching as low as $0.106 in the coming week. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $0.111 would allow you to enter the trade at a slightly higher level than the current price, while the stop loss should be set at $0.113 to protect against any unexpected price recovery. The target price should be set at $0.105, slightly above the support level, allowing you to take profits before the market hits major support. Given the price trends and forecast for HookedProtocol, a conservative investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price near the support level of $0.4044. The forecast suggests HookedProtocol could continue to decline in the coming week. In this scenario, a short position is advisable to capitalize on the potential for a price decrease. For this short-term investment strategy, an entry price of $0.429 would be ideal, aligning with the current price and the downward trend. The stop loss should be set at $0.44 to protect against any unexpected price recovery. The target price should be set at $0.405, slightly above the support level, allowing you to take profits before the market hits major support at $0.4044. Given the price trends and forecast for Aevo, a cautious investment strategy would focus on a short-term approach. The historical prices show a consistent downward trend, with the current price close to its forecast and near the support level of $0.3204. The resistance is at $0.333, indicating that there is limited room for upward movement. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For a cautious short-term investment strategy, an entry price of $0.331 would be ideal, aligning with the current price and the forecast. The stop loss should be set at $0.336 to protect against any unexpected price recovery. The target price should be set at $0.320, slightly above the support level, allowing you to take profits before the market hits major support at $0.3204. Given the price trends and forecast for Notcoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a mixed trend with recent downward movement, while the forecast suggests a potential slight decline in the coming weeks. The support price of $0.00772 provides a potential floor for the price, while the resistance at $0.00838 indicates a ceiling for upward movement. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. An aggressive short-term investment strategy could involve entering a short position at $0.00800, aligning with the current price and the resistance level. The stop loss should be set at $0.00810 to protect against any unexpected price increase. The target price should be set at $0.00760, slightly above the support level, allowing you to take profits before the market potentially bounces back. This strategy aims to capitalize on the anticipated downward momentum, while managing risk through a well-defined stop loss. Based on the provided price history and forecast for Suncoin, a short-term investment strategy appears most suitable. The historical price data shows a general downward trend over the past 2 weeks, with the forecast indicating further declines. The current price is near the resistance level of $0.02257, suggesting a potential for a pullback. Therefore, an aggressive short-term strategy would involve entering a short position at the current price of $0.02. The stop loss should be placed above the recent high at $0.0226 to minimize potential losses. A target price of $0.01786, aligning with the support level and the predicted price decline, would allow for capturing potential profits. This strategy capitalizes on the short-term bearish momentum and aims to profit from the anticipated price drop. Given the price trends and forecast for Pepecoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price hovering around the support level of $0.0000951. The forecast suggests Pepecoin might fluctuate within a narrow range, with potential for minor upward movement. Considering this outlook, a long position is advisable to capitalize on any potential price increase towards the resistance level of $0.0001023. An entry price of $0.0000960 would allow you to buy in near the support level, while a stop loss at $0.0000950 would minimize potential losses. A target price of $0.0001010 would offer a reasonable profit margin, allowing you to exit the position before reaching the resistance level and potentially experiencing a pullback.